What up, traders? What up, investors? Ken here from Dyslexic Investor, and don't want to be clickbait here, so just going to go right into the trade here. Looking here at basically this happened yesterday. Again, a lot of people, a lot of videos I see are always talking about very doom and gloom kind of scenarios, and just like the Earth is going to crash, the sun's going to blow up, and the market's going to crash, and it's slightly getting to the point of irritation because again, no one knows what's going to happen. You just kind of have to ride out and just ride the waves and just continue to go with the flow. That being said, some of the more of a positive spin and looking at the optimism of the market and looking that this can potentially going higher. Yes, we are going towards the end of the month, which we could see some potential selling. That's just again on probability. That being said, looking here, someone made a very sizable bet, betting 30,000 contracts for the SPY, that's this S&P 500 index, for December 31st for the 349 call. Since this was looked at this yesterday, you can see that the open interest has increased on that particular strike price. So again, the December 31st this year on the 349 call, huge open interest coming in here. That's again, they bought that for, I believe it was $12.70. Of course, ever since then it's kind of has gone up in value due to again that overall movement, that tidal wave or that wave of S&P 500. Again, in the market, there's waves, there's crashes and things like that, but again, no one knows what's going to happen. No one has a crystal ball, so be very mindful of that. And don't give too much of a input on folks that are just constantly putting out videos saying crash, 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 because that's so difficult to tell. That being said, looking here at some technical analysis and adding some fundamental things as well with the overall market. Again, a lot of the large earnings have already came out. That's a fact. The overall market is still trending up, right? So why would I try to fight the trend just because I want to be a contrarian? Do I just want to be okay? Like if the example is a lot of the times where if you just flip a coin, and there's been studies where if you're flipping a coin and you tell everyone, okay, it is 50-50, okay? That's the probability of flipping a coin. But for some reason, there's a human reptile instinct where like, you know what? I've had too many heads. I've made 7 heads in a row. It doesn't matter. They're going to be like, you know what? Just because I had 7 heads in a row, I'm going to bet a tails next time. So that basic influence of like, hey, a reasonable mind, like, hey, it's a 50-50 opportunity, so I can just guess heads again. Of course, that's a 50-50% chance. That being said, that overall, the thought of just being a contrarian, sometimes really just trying to be different. I don't know the proper term. Again, I'm not a psychologist, but there's a certain reptile instinct where people are like, you know what? The market's too high. It has to come down. There's been too many coin flips and it's all been heads. I'm going to bet tails. I'm going to buy a bunch of SPY puts. I'm going to short the market because of this. And rather than having that mindset, maybe start trading smaller if you really do feel that, instead of just trying to predict what could happen. Because again, it's very difficult to do that. Again, there is no crystal ball in the market. So looking here at the S&P 500 and giving everyone some guidelines on some potential technical analysis on the market. Looking here from the previous swing high to previous swing low, again, we just reached all-time highs just as yesterday and really looking fairly strong in the market. By strong, I mean there's looking at the overall trend. So what do we look at the trend? We look at it, it's above the 200 EMA. That's again, that little blue line here. We kind of have these little, I call this my little macaroon on potential supports on the way down. We can get to that in a second. Looking here between the 5 and 8 moving averages, we're still above that. Like this trend is really strong here. RSI is printing great. Volumes on oscillators doing really well as well, and looking for potential targets of 350 plus. So again, that potential call that we just looked at was way out into the literally the last day of trading of this year, and they're betting the 349 call. Again, we don't know if the if that hedge fund or trader, again, it's a pretty large amount. We're talking about 38. I think it was, what was it, 38 some odd $1 million. Well, I didn't even show you the amount. It was, yeah, $38.1 million that this particular cost of this trade is allocated to. So that's a pretty substantial amount. Like, I don't think a lot of people have $38 million lying around. So it's most likely a larger hedge fund or a very wealthy group of traders. With this particular trade, we're looking for, again, they're looking for that 349 call. Again, it's still out of the money as of right now, but as we continue to grind higher, I think there is, again, no crystal ball here, everyone. Just be very clear on that, that we do have some short-term potentials. We have Mr. Powell speaking on Thursday. We have the elections coming up. We have the to and fro with China. We have all these other variants. But if you just focus on these all these negatives and just really just look at the chart, I'm like, okay, uh, logically speaking, we're still in an uptrend, and there is particularly no signs. The signs of potential issues coming through would be if we start breaking below the 21 and start coming down to the 50 percentile move, or the 50, or the sorry, the 50 SMA, which is around 320 as of right now. And that's kind of in that yellow, little bit of that yellow zone that we have on the macaroon here. Of course, going to the lower side, the red, which is going to be around the 200 EMA, those are going to be basically your warning signs. If it comes down to the green, which is basically anywhere from the 21 to the 50-ish to the top of the 50 EMA, will be something to be potentially looking at, like, hey, this is somewhat of a reasonable correction, but nothing to get too worried about. And just be mindful of that. And just more or less, I just wanted to make this video because I've watched maybe like 10 videos about people just saying market crash, market crash, market crash, and there is no logical sense to what they're saying. They're just saying, oh, because the market's all-time highs, it's due for a crash. There is no other rhyme or reason behind it, because they read an article on CNBC or Forbes that someone else said, blah, blah, blah. Some talking head said that the market's going to crash. So it's just going to be very careful in what kind of mindset you put yourself in, and just really take the emotion out of it and just suck it out and just looking at the facts that we're currently seeing within the market. If you're just doing technical side, what I do majority of, and adding of the fundamental stuff and being aware of what could happen, and so looking at potential price targets on the way up. Again, these are just price targets. Again, I do not own a crystal ball on my desk, and I don't have any kind of formal secrets of that the trading gods are telling me, coming down in my sleep and telling me where the market's going to be heading. So looking for potential, again, looking at the technical analysis side, to kind of help me look at support and resistance, and where things could go. Again, not expecting them to go, just being ready if the market takes us. Because again, we are in the we're not in the driver's seat. We're in the basically in the back of the bus, waiting and just letting the market drive the bus, and just kind of deciding when to get in and out of the bus and pulling that lever to get out. That being said, looking for, again, when we talked about that call that those individual hedge funds made, I say hedge funds because it's a $38 million trade, looking for around that 350 potentially. That's a nice round number, 349 that call strike was. Really looking for that next overhead line in the sand would be around the 1272 extension. That's a Fibonacci retracement from the swing high to swing low. Looking for the 37170 for the next overhead site of resistance. And again, we can run up into this really fast. We can cut right through it. We can kind of do a nice steady eddy like we're currently looking at now. This looks like we could just be a nice steady eddy here, movement going here, still holding between the 5 and 8 moving averages, and coming down to the 21 again. Potentially, like we just covered, looking for that green, yellow, red being the warning signs. Just kind of make it the colored macaroon that we call it here, and looking at potentially, hey, this is normal. Be cautious, and like, hey, that looks dangerous, kind of indicators there, kind of being somewhat looking at that. So again, next initial support to the, or resistance to the upside, is at 371. But again, anything can happen in the market, and be very mindful and get ready for any kind of turbulence on this fantastic flight that we call the stock market. All right, guys, thank you so much for watching. This is Ken from the Dyslexic Investor. If you're interested in trading and opening up a brokerage account, we have an affiliate link with Tastyworks. Greatly would love for you to check that out. As well, we have a fantastic Discord where we talk about stocks, other various things within the market, and we have a Patreon page, and you have the YouTube join button down below if you're interested in directly supporting the channel. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side.